is the DeFi Decoded podcast by 9 Point Partners in cooperation with Prophecy DeFi. The ideas and opinions expressed in this podcast should not be taken as investment advice. Always consult with your financial advisor before investing.
Well, pumpkin spice lattes may be back in stock at Starbucks, which portends fall's arrival, but it's still very much NFT summer in crypto land. So much so that we are taking another break from our normally scheduled programming to talk about what is, I would say, inarguably the biggest and most exciting thing that's happening in the industry today. So for people who aren't aware of what's going on, August smashed basically all records for transaction value in this new breed of digital assets. NFTs are non-fungible tokens. And just as a reminder, an NFT is basically a unique digital asset. So Bitcoin, dollars, these things are fungible, right? One Bitcoin can be traded for another Bitcoin, a dollar and a dollar, they're the same thing. NFT, like art and other collectibles, are unique digital assets. And that's where they're really finding product market fit. At this stage, at least, there are no signs that this is slowing down. In September, OpenSea, one of the leading NFT platforms, tallied volumes of more than $1 billion in the past month, which is more than eBay's entire sales volume in the same period. And we're seeing crypto art connoisseurs, or maybe just speculators, now routinely spending thousands and sometimes millions of dollars on the rights essentially to own these certain rare images. And some of them are beautiful pieces of artwork and others are not so much. Beauty is in the eye of the beholder, I suppose. So the dam is broken and NFT culture is flooding into the mainstream. Tom Brady, the football player, has an NFT platform called Autograph, and Steph Curry, star of the Golden State Warriors, has changed his Twitter avatar to an NFT that he owns in his crypto wallet and paid $180,000 for it to boot. As it happens, the day after he did that, the company that launched the NFT he purchased was able to sell $100 million more. So good timing on Steph's part. We hope he got a piece of that action. So anyway, to get a handle of what's going on here and to try and sort of tie it back into decentralized finance, Andrew and I are going to kind of dive in here and try and understand, what this is, what this could say about DeFi generally, how art as an asset class is becoming an investment that people can now participate in more easily because of the divisibility, transportability, and custody of digital assets just being much easier than art. So Andrew, let's talk about NFTs. You actually tried to make a purchase recently of an interesting NFT project. Tell us about that experience.
Yeah, first of all, thanks for the introduction. Yeah, I think NFTs is probably one of the craziest aspects of kind of the crypto ecosystem right now. And to a large extent sort of garners the most skepticism from a lot of people. But it's definitely kind of the most mainstream sort of level of adoption I've seen so far. I mean, NFTs are kind of like DeFi. They span so many different sectors. We could spend 10 episodes covering each of the different sectors. I initially got into NFTs through this platform called Super Rare about 2.5 years ago. And Super Rare is essentially digital art. So you can buy typically like something as easy as an image to something more like a GIF. And it allows you to be kind of the sole owner of these pieces. And that sort of spurred my interest. I was sort of active on the Super Rare platform. And then that kind of leads to my last purchase about a month and a half ago, I believe, which was the Damien Hirst, the currency sort of portfolio. So Damien Hirst obviously is like one of the biggest artists in the world right now. And he came out with this incredibly innovative sort of NFT physical art project. Essentially what it was is he's created 10,000, I guess you can call them pieces, each one sort of the size of a piece of printing paper, with tons of sort of colorful dots on each of them. And then he's actually given each of them names based on his favorite, using an AI generated algorithm that sort of scrolled through his favorite song lyrics. So they all have kind of interesting names. And what he did is he created 10,000 of these and sold them for $2,000 each. And they were sold out pretty much immediately. Like for example, we tried to buy 20 of them, and we're only able to buy one. And essentially, the big idea with this is that when you buy the painting, you are actually buying essentially both an NFT and the painting. And then after 12 months, you have to choose between either the painting or the NFT. And so what I mean by that is if you choose the painting, so you choose to receive delivery on the painting, they will actually destroy the NFT, provably burn it, and you receive the painting. If you choose the NFT, they actually will burn, and they'll record it as well. They'll burn the piece itself, and you now essentially have the NFT. And so it's this big kind of social experiment to see what is actually worth more, I guess, and also sort of see what social consensus says about kind of the medium of the piece. And just to show sort of the excitement of the NFT space right now, in the last 6 weeks or so since it's launched, the price of each of these currency pieces has gone from $2,000 to about $50,000 today. And so it's been kind of a crazy growth. It's illustrative of the crazy growth in the NFT space right now.
Well, it's interesting for a couple of reasons. You pointed to the medium. There's a quote by Marshall McLuhan that the medium is the message. And I think that this is certainly true of NFTs, right? The art pieces themselves and the images that they portray are interesting as pieces of art or as collectibles. But really what we're seeing is the medium becoming the message. And what strikes me is that a lot of critics of NFTs say people are spending a lot of money on JPEGs, basically. Like, look at me, I've can you tell the difference between my forgery and it's just the same image, right? Because they're just digital images. And this Damien Hirst project, I think, really tries to explore this concept in a really thoughtful and really clever way, which is to say, well, if in fact more people choose to own the NFT than the canvas, it undermines this notion that, well, there's all this other benefit to owning the art. You can display it in your house, and when people come by, you can point it out or whatever. It gives you joy because it's hangs over your mantelpiece. These are all the kinds of critiques that we hear, and maybe they're valid, maybe they're not. But if in the end, a lot of collectors end up buying and displaying their art digitally rather than doing so, in their homes and in the physical medium, I think that says a lot about this whole thing. So, NFTs are a fascinating subject for a couple of reasons. In my view, an NFT, like any other piece of art, is a rare thing. So maybe it's worth something. Maybe you can sell it for more. It gives you a connection to the artist. And I think probably the most important thing, certainly what NFTs are being used for today, is basically social status. If you're the owner of a certain kind of NFT and people know what it's worth because this is all on chain, that you paid $50,000 for it. That says something about the kind of person you are, right? It says that you're an early adopter and you've got money to burn pretty much on something that is what in most people's view would be a novelty. Now, maybe there's more to it than that, but certainly that's what we're seeing today. And I wonder what you mentioned at the outset is it's the craziest part of the crypto space, but it's definitely the part that's gone the most mainstream. We can talk about DeFi and all the different applications and the growth that we've seen, and it's been tremendous. But in no way are we seeing celebrities jumping on the DeFi bandwagon to the same degree as we have with NFTs. Why is that? Why do you think NFTs have just found that product market fit?
Yeah, it's a great question. I think the easiest thing is kind of what you pointed out. It's a digital status symbol. So for the longest time, you can there's always ways to show off sort of physically, right? Like cars, fancy art pieces in your house, stuff like that. But there's never really been a way to have a status symbol digitally. Right? So what I mean by that is, like, we spend, I think the average time now is around 10 hours per day online. Especially now with COVID kind of restricting in-person socialization, we increasingly are spending increasingly socializing digitally, and almost more so than we do physically. But you can't really show off your car online. I mean, I guess you could post videos about it and stuff like that, but it doesn't really fit nicely into a profile picture the same way that a lot of these NFTs do.
Right.
And that's sort of been, I would say, kind of the growth hacking trick of NFTs. I would say there's kind of two things that are really leading to it. The first is everyone, once they buy these NFTs, they put them in the profile picture of their Twitter accounts, sometimes for their Instagram accounts as well. So right away, it sort of has this like inbuilt viral function in it. And then the second thing that's really led to kind of a crazy interest is the fact that NFTs are digital tokens, which makes them extremely easy to be sort of bought and sold, and for much lower transaction costs than it takes to sort of buy and sell physical art or old cars or stuff like that. And so you have this incredible kind of financial system building around these NFTs, which has driven tons of speculation, in addition to kind of the mainstream adoption.
Yeah, it's interesting. There was a time when someone used to get rich on Wall Street, buy a Lamborghini or something, but as a status symbol, as an ostentatious show of wealth. I mean, like in the end, like it's just a car, right? And it's actually not particularly practical. Like you can put more people in a Corolla and haul more, so you're better off buying one of those. So most of the value, other than the engine and whatever the performance is that it's a status symbol. And I think about the people who, like, clearly the people who are buying NFTs for hundreds of thousands or millions of dollars are people who are wealthy, but also who are crypto native in their wealth. And for them, like the idea of spending $200,000 on a sports car is far less appealing than spending $200,000 on an image of a rock. As crazy as that might sound to some of our older listeners who say, well, what's a picture of a rock worth anyway? It's just the reality of the world that we're living in. And I think that that's so fascinating, with this idea that, we're spending more time online, more of our identity is wrapped up online, how we project ourselves, if we're cool, if we're connected, if we're rich, if we're this or that, needs ways of expressing online, and NFTs are a way of solving that particular problem. This is an interesting segue into this idea of the metaverse, which, you mentioned people buy these NFTs, make them their Twitter profiles or their profiles in other social media networks. In effect, they're creating a unique digital avatar for themselves that is provably unique on the blockchain, whatever blockchain it might be, Ethereum typically, that allows them to basically kind of port their identity through this world, this online universe. Do you buy into this idea of the metaverse? Maybe can you just explain what it is in your mind that's so interesting here?
Yeah, the metaverse is crazy, and actually, it's become kind of prominent because Facebook kind of announced themselves as a metaverse first company. They see it as kind of the next computing platform.
Yeah.
In a nutshell, a metaverse is sort of like a collective virtual shared space. And so, like you said, it's kind of like I guess it's kind of a place for people's avatars to sort of meet and socialize and also do economic activity together.
Yeah.
Metaverse, actually, I sort of was first introduced to Metaverse through this crypto project called Decentraland.
I remember.
And Decentraland is really fascinating. Essentially, they created this kind of unique, I guess, land area or city with using the blockchain to sort of have provable scarcity in terms of the amount of land plots in the city, and with all of the kind of the reserve currency of this place using mana, which is like the Decentraland token. And then essentially what's happened is there's been this pretty big kind of, like, I would say, economic system building around it. For example, a project called Decentral Games bought some Decentraland and created a casino there with real world currency, or sorry, I should say cryptocurrency, and essentially users can now go in their avatar and go to these metaverse casinos and actually play like slots and stuff like that. And you can socialize with other avatars. And these plots of land, because of kind of this potential for, you could set up digital shops, you could set up an NFT sort of Sotheby's. The Sotheby's of the future will be built on Decentraland, for example. And I was kind of alluding to this financial system around NFTs. You can actually, obviously you can buy these plots of land, but there's actually people creating projects where you can get mortgages to buy these plots of land, and creating like a truly virtual financial system.
Right. I guess the difference, people would say like, well, that's so interesting about Decentraland, but there isn't really a limit on how much land there is, really. I mean, there may be in the Decentraland universe, but someone could stand up another Decentraland, whereas, you know, there may be actually finite land in Manhattan or wherever, right? So isn't, and I don't want to get too far afield here, because we do want to talk about the DeFi connection to all this. But, you know, to me, I don't know if this is getting too nerdy, but there's a book, Ready Player One. They made it into a movie, which is the idea that there's sort of the knitting together of, you know, virtual worlds, of video games, of your social media, you know, your online persona, and this becoming sort of this alternate universe, you know, and with Facebook's case, the idea of meshing that with virtual reality and augmented reality means that, like, wherever you are, you can slip out of the physical world and into the virtual world. And obviously, you know, and if the virtual world is big enough, we spend enough time there, there's going to be a lot of assets in the virtual world. Those assets need to have a way to have value. We need to have a way to move around those different ecosystems, right? And so NFTs and crypto assets are the only way to do that. So where we're going, and this is not anytime immediately, but could be, is this, you know, reality where, you know, virtual assets and NFTs can travel between the metaverse and into the regular world, you know, be used to prove our identity, to be used to buy goods and services, to trade for other assets, you know, seamlessly. And that's in a way a form of financial marketplace, right? Which in a way puts it in the DeFi bucket, so to speak. Do you agree with that?
Yeah, I do agree with that. I think that's kind of like the much sort of longer term vision of connecting kind of meat space with the metaverse.
Meat space.
Yeah, meat space. It's the crypto term for, you know what I mean? The physical
real world. Yeah.
Yeah, the real world, as we say. But I think in the short term, what will likely happen is that they're going to be sort of siloed off. So kind of a continuation of the current trend where you have, I mean, notwithstanding sort of the really interesting projects like Damien Hirst, trying to sort of bridge them a little bit. But I think there'll be, like you said, there's going to be kind of this crypto native digital NFT market with kind of crypto native financial platforms built around it, such as the mortgages on Decentraland, that are all going to be completely blockchain based. But then long term, I mean, the long term is kind of scary when you start connecting the two together. I mean, I don't really know what that would look like, but that would definitely be pretty pretty cool, sort of very cool to sort of live in once that kind of starts to merge.
Yeah, I don't know. I'm more of a meat space guy myself. Like, I don't know. Maybe I'm old. I just, something about the meat just, it appeals to me less so than the virtual world. Okay, let's talk about NFTs as an investable asset class. And this is not financial advice, but let's talk about how art is an asset class, right? $70 billion a year of art changes hands, and obviously the size of the actual all art outstanding is much larger than that. It's an asset class. We typically think of something that rich oligarchs, you know, buy paintings to launder money. That's, I think, what most people think of when they think of the real art world, you know. And NFTs seem to be doing something different, which is that they're creating opportunities for regular people to own art. Now, obviously, the average human being should not spend 100 grand on an image of a rock, but the asset class itself is one that's growing. So what kind of ways are there for people to get exposure to this space?
Yeah, that's a great segue. I think there's I mean, there's so many different segments, but the three segments I sort of think of are, there's sort of the mainstream NFTs that are trying to bring sort of traditional traditional brands into the space. So things like NBA Top Shop, for example, which are kind of like digital highlights.
Yeah.
The idea of being almost like sports trading cards. I think that's really interesting. Those pieces tend to be much kind of lower cost and more accessible. And again, those have far more mainstream adoption than I would say crypto native adoption. Then there's the kind of the one of one NFTs. So these are kind of like digital paintings where there's only like one kind of copy of it, and you get to be the sole owner. And that was kind of how NFTs originally started, and that's stuff like super. And then finally, what's been leading the charge, and you sort of alluded to it with Stephen Curry's big purchase, is this new thing called generative art, which is essentially, I mean, I don't even know how to explain it, but essentially it's like 10,000, typically 100 to 10,000 sort of pieces of a different, I guess you could call it avatar, with different characteristics that have varying levels of scarcity and rarity. So you have things like ether rocks, which is literally 100 different images of rocks, but there's only 100 of them. And so I guess that, and sort of the first one to do it. And so that makes it kind of rare and scarce. And then you have things like crypto punks, which are sort of like the OGs of this movement, which I think like the floor price on those is now a couple $100,000, or at least $100,000. And then
just explain floor price briefly.
Yeah. So sorry. So okay. So there's each of these different avatars. I guess you could call them avatars. Each of these different avatars has different characteristics. Some with more rare characteristics, and some with less rare characteristics. And the floor price refers to the lowest possible, sort of the lowest priced avatar currently on market. So say there's 1,000 of the 10,000 are up for sale. It would be kind of the lowest, the cheapest possible way to buy one of these CryptoPunks.
Right.
But again, sort of, they have varying levels of price, obviously. So like you can get kind of a floor price CryptoPunk, which is like a very sort of generalized one, for maybe $100,000, but then the more rare ones will sell for 5 to 10 million. And so, yeah, but typically how people sort of value these, each one is sort of unique. It's hard to kind of value the whole thing. So typically the way sort of crypto people value them is the floor price. What's the lowest cost one you can buy? And that's led to a lot of innovation as well, which I can actually talk about a little bit now. Is it's led to, so each of these NFTs is unique, which is great, but it also sort of leads to illiquidity because they're non-fungible. That's what the NF stands for in NFT. And so what's the innovation that's sort of starting to pop up is from projects like NFTX, where essentially you can pool these assets into kind of almost like an ETF or index of NFTs. And it allows you to actually sort of pool liquidity of these different sets of generative art, and which kind of concentrates liquidity and leads to a more kind of robust financial system, you can call it, around these assets.
Yeah, it's interesting. I mean, nobody like maybe buying a single CryptoPunk, not that anyone normal can even afford it anymore, but buying $1,000 of a fractionalized portfolio of a variety of NFTs seems like kind of an interesting thing that someone may want to do if they are interested in getting exposure to art. So we're seeing, I think the value of the NFTs in circulation today is over $10 billion. I saw that stat today, which is insane when you think about where we were. I actually was looking at going through an old deck for some a comparison for a thing I created a few years ago called the token taxonomy, because I'm actually writing another major piece and I wanted to reassess how that token taxonomy kind of holds up relative to sort of where we ended up. What are these tokens? And it did pretty well. And one of those things is called crypto collectibles. Before the word NFT entered the lexicon. And I was looking at the speaking notes from the presentation, and I was talking about rare Pepes and crypto kitties, which are some of the like original examples of NFTs. And talking about how a crypto kitty had sold for $50,000, and what a kind of crazy thing that was. And in retrospect, as in with all things related to this asset class, it seems sort of cute, not just because it's a kitten, but because the dollar value is so tiny compared to where things have ended up. So who knows where we're going to end up? This is NFT mania. Manias sometimes last forever, or they don't. There are bubbles that never pop. People don't remember, that, but that's true. So we'll see. I don't know how it's all going to play out, but it's been an interesting discussion. Definitely eye-opening for me to learn a little bit about your experience, Andrew. And this is something that we'll be definitely keeping an eye on. We'll have to bring on an NFT artist, I think, at some point in the future to talk about it. Maybe Damien Hirst will make an appearance on DeFi Decoded. We'll see. Anyway, all right, that's it for us. Thanks everyone for joining. This one was a little bit longer. We could have gone on forever, honestly, but it's a great discussion, and we'll see you next time. Take care.
The information contained herein does not constitute an offer or solicitation by anyone in the United States or in any other jurisdiction in which such an offer or solicitation is not authorized, or to any person to whom it is unlawful to make such an offer or solicitation. Prospective investors who are not residents in Canada should contact their financial advisor to determine whether securities of the funds may be lawfully sold in their jurisdiction.